Okay, taxes are due soon.
I don't have taxes.
Jules, yes, you do have tax, and you got an unexpected 1099 or two from platform providers that you didn't get in 2023. Hmm. Is that a mistake? Nope, the IRS changed the tax laws. Here's a 30-second clip from another one of my videos that explains what happened. If you had a small side hustle in 2023 or before, you likely were on the honor system. This is Rachel, and she's from the government and here to help you. What she isn't saying is that the IRS now requires your platform provider to report income on lower thresholds. In 2024, if you made $5,000 or more from a single platform provider, you likely got a 1099. In 2025, it is $600. If you got a 1099, so did the IRS. If you made $5,000 from a single provider and didn't get a 1099, it was a mistake. Rachel is reminding you that side hustle income is taxable whether you are 1099 or not. If you want more information or want to watch all of Rachel from IRS, here's the URL. So you might need some deductions from the income that you now are needing to report, and you don't want to rely upon Rachel from the IRS for help. So watch this video. See you at the end.
All right, so you've got awesome side hustle going, bringing in some extra cash. That's fantastic. But then tax season rolls around.
Yeah.
And it's not so simple anymore, especially when you're already dealing with taxes from your main gig.
Definitely adds another layer of complexity. You're not just an employee, you're a business owner too, even if it's just on the side.
Exactly. So for this deep dive, we're focusing specifically on you. You're juggling a full-time job and a side hustle. You're not incorporating or dealing with employees yet,
Right.
and you don't have any equipment to depreciate. So let's start with the big picture. What are the biggest changes in the 2024 tax world that our listener absolutely needs to?
One of the most significant changes this year involves the Qualified Business Income Deduction, often called the QBI Deduction.
Right.
This deduction lets eligible business owners deduct up to 20% of their qualified business income. A pretty sweet deal.
20%. That sounds like a serious chunk of change. Tell me more.
It can be, but there's a catch. For 2024, the income thresholds for the QBI deduction have gone up. For single filers, the threshold is now $191,950.
Okay.
And for those filing jointly, it's $383,900. So this means if your total taxable income from all sources, including your W-2 wages and your side hustle,
Right.
goes over these limits, your QBI deduction might be reduced or even disappear entirely.
Okay, so this is where it gets a bit tricky for someone like our listener who's working a full-time job and running a side hustle.
Yeah,
You've got to be extra careful not to exceed those income limits.
exactly. And it's especially important for those with service-based businesses, which many side hustles tend to be. Things like consulting, freelance writing, or graphic design, those often fall under the service category.
Interesting. So even though a 20% deduction sounds amazing,
Yeah.
there's definitely a strategy involved here. It's not a free-for-all.
Right. It's all about understanding the rules and planning accordingly. Now, another change for 2024 involves bonus depreciation, although this one might not impact our listener directly right now because they don't have any equipment to depreciate.
Okay. But just in case our listener is thinking about investing in their side hustle in the future,
Yeah.
let's break down bonus depreciation.
Yeah.
What is it and why should they care?
So bonus depreciation allows businesses to immediately deduct a large portion of the cost of eligible assets, rather than spreading those deductions out over several years. Think of it like an instant tax break when you buy something big for your business, like a new computer or some specialized software.
That sounds incredibly helpful.
It is, but here's the thing. For 2024, the bonus depreciation deduction has decreased to 60%. And it's actually slated to phase out completely by 2027.
Oh, wow. So if our listener is considering buying equipment,
Yeah.
sooner might be better than later from a tax perspective?
Exactly. Something to keep in mind as you plan for the future. Always think about those tax implications. Now, switching gears to something that probably affects our listener right now,
Okay.
the deduction for business meals. I'm curious, do you often meet clients for coffee or lunch?
All the time.
Yeah.
Especially when I'm working on a new project or trying to seal a deal. I practically live on coffee and pastries during those busy periods.
Well, then you'll be happy to know that the business meals deduction is back to 50% for 2024. So half of those coffee dates and client lunches can be deducted from your taxable income.
Ooh, that's a relief.
Yeah.
50% is better than nothing, that's for sure. And since those costs can add up, especially if you're networking or meeting clients regularly, it's good to know you can at least recoup some of that money come tax time.
Absolutely. But keep those receipts. You'll need them to prove those expenses. Speaking of tracking things, don't forget about your mileage. The standard mileage rate for 2024 is 67 cents for every mile you drive for business purposes. So if you're using your car to meet clients, pick up supplies, or travel to workshops or conferences related to your side hustle, make sure you're logging those miles.
Ugh, mileage tracking. Always forget to do it consistently. Any tips for staying on top of it?
There are tons of apps out there specifically designed for tracking mileage. You just turn it on when you start driving for business and turn it off when you're done. Makes it super simple.
Okay, that sounds way better than trying to scribble down notes on scraps of paper.
Oh.
I'm definitely checking out those apps. What else is there on the deduction front?
There's also the excess business loss limitation, but it probably won't affect our listener right now.
Okay.
This rule basically limits how much business loss you can use to offset non-business income, like your salary from your main job.
Okay, good to know it exists. We'll save the deep dive on that one for another time.
Sounds good.
Yeah.
Always good to know what's out there, though, right?
Absolutely.
Yeah.
Thanks for sticking with us. Please like, share, and subscribe to this video. All comments are welcome.